Okay, traders, continuing on our higher time frame mastery, we're going to be looking at first red day and first green day signals. Now, I want you to just be patient in this video and really focus on the big concept about the monthly cycle and identifying in the headspace of identifying first red day signals, first green day signals. In the last video, we talked about markets when they were inside, establishing one of the extremes, whether that be trading inside in a downward direction to trade and establish a low of month first green day signal that can now potentially be trading in the long direction and breaking out if a market is in a strong breakout already, or if we have a market in breakout and it's potentially reversing from an extreme for either a first red day or first green day signal. Now, going back and understanding week 1, week 2, week 3, week 4, and major red news that's on the calendar, non-farm payrolls, CPI, FOMC, and how often those high impact news releases can shift a market. That doesn't mean that that has to be traded, but having a step back and aligning your thesis with that underlying directional bias, if indeed there is a coil or a parabolic trade set up in line with that higher time frame, not counter trending a market that is already in a unidirectional bias. And this is where I repeat the phrase, don't worry about trying to catch the high and catch the low. Focus on setups where all time frames are aligned. And that is what the ACB trades are all about, markets that are coiled to explode. And that doesn't always have to be a reversal setup, as we saw on some of the examples that coiled for trend trades and range expansions, the same type of trade, but in the direction of the trend. And that is the type of trade setup that aligns with a first red day coil or a first green day coil when those signals present. Now, I want to emphasize to traders, in the playbook, we talked about this, and I've said that sometimes the trade can come the second day, and it depends on the session that you're trading. So, for example, a New York trader may not get a first green day trade for another week after the first green day is locked in terms of a coil, because it may move in Asia, it may move in London, or it may already be trading higher in a directional trend trade, whereas I won't take those, and I will not teach my sons to take those. I'll only teach them, as I've said, to take trades that go into the coil when all time frames are behind that move, and we have that EMA coil sideways for an explosive move. So it's important to first master the big picture concepts of what a first red day and first green day signal is potentially showing us, and that is the extremes when a new month begins trading. In the last video in this section, we talked about the month itself, monthly candles, open, high, low, and close. Open, high, low, close, open, low, high, close, whatever that market prints. But understanding that usually at one of those extremes, we had a valid first green day or first red day trade opportunity. And if it was an explosive day on major red news or it traded in a different session, there still were follow-up coil trades probably in every session as that month traded to the last week of the month. So reinforcing to step back, and we'll just go through big picture first. I'm going to walk through a series of different charts to just hammer home the understanding of when a new month starts. Some of you will just look for specific behaviors on any instrument. Others will be focused on certain instruments and trying to align yourself if a best trade setup scenario presents with one of these signal days. Now, just for a simple example, we're looking at the Japanese yen daily. This is a recent example from November. We had an explosive day breaking out of the high of month, but I want to just talk about the month itself. The previous month closed in breakout. The previous month closed in breakout. If we just consolidate this chart and have a look, we can see that the market traded through the high of the previous month and closed in breakout, and we were inside of a larger monthly range. But I want to just sort of get into the headspace of process. So we have a market that breaks out and pulls back. So some traders are trying to trade this as a first red day, but I want you to pay particular attention to how markets close and set up. We're inside of a larger candle. Inside of a larger candle, the market continues to trade. So for simplicity, we can call this a first green day. Breakout, pullback, continuation. So traders in some session, Asia or London may have had trend trade opportunities, but we break out. We break out of that new high of month level. So if we go back to our original high of month, we now have one close in breakout, two closes in breakout, and a third close in breakout at the high of the month. We have a third close in breakout at the high of the month. So traders are going to say, yeah, but it wasn't in breakout, it was inside of the range. But see, the original monthly level is right here. Into our last low close of the month bar, if we just draw this level up to our low close of the month bar over to the left, that market closed outside of that range before exploding and reversing. So we've taken out these lower level longs, and now we've broken out and pulled back and continued in breakout. So we have three higher closes heading into our Friday. Now we'll talk about specifics later, but I want to just get big picture concepts. We've broken out in the long direction. If we've broken out in the long direction, at some point, we are probably going to get a first red day signal. Now, some months are going to continue to trend into the close, but in this particular case, we haven't. We've got a first red day signal. First red day signal, moves sideways, makes a lower low before pulling back inside and going high again, going long again. Now, this is what we would call our break in structure. We've broken low of day levels on the way up. Right? So we've come up and we've broken all those lower low of day levels. So now we have lower lows on the inside after a first red day signal. We have taken out all these lows, moved sideways, making a lower low, and then a lower low again before closing in breakout. Closing in breakout inside of our first red day signal. So now we're potentially on the backside of this move. Front side, first red day, coiling sideways, looking now potentially at a reversal back towards that low of month level. Now, we're not even talking about days, Monday, Wednesday, Friday templates, but I think you're starting to grasp that idea. New week, new timing cycle, new potential directional move. Monday, Tuesday, Wednesday, closing in breakout. There's a Wednesday high of week closing in breakout, potentially now setting up for an ACB trade setup opportunity. Wednesday close in breakout, high close of the week on the backside, potentially setting up for an ACB trade setup. Now that's a signal. We start to make lower lows and break down inside day, another signal day. Breakout pullback. This market now could be potentially on the backside of this pump and dump over the monthly cycle. Now, remembering the intent of this video is to grasp the bigger picture concepts. We're going to go down to the smaller time frame and setups in the following video, but I want to go over big picture. So we have a market that's broken out, three closes in breakout, a first red day signal. We'll talk about setups and that later, but big picture concepts. First red day signal, coiling sideways, a market that closes in breakout at the extreme of a week, potentially setting up on a Wednesday for an ACB template on Thursday. Inside day, triggering the low of the inside day. Inside day traders are now in, coiling sideways into the new day. So we have our Monday, Tuesday, Wednesday, Thursday, Friday, new week, new timing cycle. Inside bar traders are in Monday, opening range, breakout, pullback, continuing with our first red day thesis into the close of the month. So I want to impact upon you with each example that we're not just calling every down day or every up day a first red day or first green day. We have markets that traded down, but it exploded out. Breakout, pullback, continuation. So we have our large first green day it traded back into it after the breakout and continued with our long directional trade on the front side. Paul Tudor Jones, if a market's giving you the indication of a range expansion, be prepared for the market to get ready to move in that direction. Front side, first red day signal, coiling sideways, lower lows, lower highs, closing in breakout on Wednesday at the high close of the week, potentially setting up for an ACB trade on Thursday. Inside day, coiling sideways underneath of our bull candle. We'll just draw that for visual representation. And I want to state again in this video, I'll repeat this. Think of yourself as an end of day trader, and you're looking to position yourself based off the daily chart when markets are moving in a direction or potentially going to reverse and move in the other direction. So we have markets that give us narrow range days for a 1-bar stop on a daily chart. We have a large range engulfment. Now we wait for our daily signal. We have a bull candle closing in breakout back up into our engulfment. If the market breaks that level, higher time frame traders are potentially positioning themselves at that low of day level with a stop at the extreme. Large funds, large players can handle that type of stop loss with size based on their percentage of risk factors, etc. But we're doing the same thing, but we're aligning ourselves with the day that is potentially now going from an open to close or close to open on a trending day. Trending day, on understanding that Monday's the opening range, Tuesday typically day 2 expands the range. And if we have a first red day signal, we want to see the market breakout, pullback, coiling sideways. Now we're also going to be looking at participating in these first red day, first green days based on our ACB templates when and if they show up and they offer that coil setup into our session. But big picture is first red day, first green day in a monthly cycle at the extremes, because that can set us up for other coiled all-in opportunities, ACB opportunities on other days. Big pictures, first green day, first red day at the extremes of markets, whether they're inside or outside, and how the month has closed. Now, following that same thought process across into our new month, we have lower highs, lower lows until we get our engulfment candle and a first green day signal. Now, you've heard me say in the other videos that these pin hammers technically could offer first green day and first red day signals. For simplicity's sake, I want you to focus on just the signal days for now until you grasp the higher understanding. We've broken a daily level now, so we potentially have our break in structure after our first green day signal. Now you'll notice on this first green day signal, we have a breakout and a 2-day pullback. Day 1, day 2, an inside day, which is a signal day, and very similar to what we just saw in the previous month. When we were breaking out of the high of month level, we saw a 2-day pullback, 2 lower closes. That was also almost an inside day within a pip or two, but you'll see the same signal, breakout, pullback in a new month, new timing cycle. So we have now aligning our thesis with that higher time frame understanding that the low of month may potentially be in place, and as they trade lower, do we have a setup in the session that we're trading? So we're not going to go down into that just yet. Obviously, we have that setup. Grasping that bigger picture understanding when we have a new month starting. Now we're closing in breakout. We may not have the low of month locked in yet, but we trade lower without trading lower than the low of month. We break out and pull back and close. We break out and pull back and close. And then we explode and break, close and break out in the long direction. We may have the low of month now in place. If we have the low of month in place, what type of setup do we need when we're looking for that explosive long trade now if our first green day thesis is intact? That market explodes and breaks out. And you'll notice when we close and break out, the market continues to trade higher. Now, interestingly enough, the explosive breakout is a new week, a new timing cycle. Now, you need to hear me say this. I don't care what the reason is. I don't care if it was because of the election. I don't care if it was because high impact major red news. I don't care about any of that. What I want to know is do I have a setup in the session that I'm trading in aligned with that higher time frame thesis? I don't care about anything else. That's what traders need to understand, regardless of, the market didn't like the numbers, they didn't like the election, they didn't like CPI, or they didn't like the non-farm payrolls release. I don't care about the numbers. I could care less. I want to know what the market is telling me about where it's headed, and when it comes to my session, is there a setup now aligning with that higher time frame thesis? Thinking has nothing to do with any of this. It's, do I have a setup? Now, if the low of month is potentially locked into place, our next major stopping point could be anywhere within this previous month. And if you look closely at these large black candles as they fall from the first red day signal the previous month, this is actually one large bear candle all the way down. All the bull candles are inside of the larger bear candle movements. So this is an indication that this market now could be heading in an explosive reversal back to the other side of the range. Now, if we're concerned, this is the most recent bullish high of day level. Once it clears that, you'll notice it pins down and pulls back. And another indication, again, of aligning ourselves with the higher time frame, a one-day counter trend. It is not a first red day. We're inside of the range. First green day, first red day, we look for them at the extremes. And how does price behave on the day after our counter trend days? We looked at an example again of that in the last video. When a market gave a first red day signal on the inside of a range, it was a Monday-Tuesday pattern. And again, in this particular case, our two-bar pattern is at the previous first red day. The first red day low before it coiled sideways is a Monday-Tuesday trade setup. 2 days trapping shorts and an explosive continuation on Wednesday, Thursday, and Friday, pulling back inside of the range. Then as we head into the last week of the month, we have 1, 2, 3 higher closes, closing out our week. 1, 2, 3. Just show this to traders again, the same behaviors over and over again. A narrow range day, we'll pull this up, and a reversal into our closing day of the month, which again, we went in the last video, our last trading day of the month up high is a first green day behavior. What that tells us is that we can still be going higher, that the high is not in place yet, which we do. Now I'll highlight that candle again for traders. A candle that demonstrates a first green day characteristics. Pin down, closing as a bull candle at the extreme in a 2-bar pattern, a bear candle down, a first green day candle, and then we head into our new month and we start again. And traders will notice 1, 2, 3 higher closes. Now we've broken out, we have 3 higher closes, and then we get our first red day. Now, interestingly enough, we're heading into major high impact red news. We have a non-farm payrolls Friday, pinning the extreme, taking out the high of the week made on our 3 higher closes. So Thursday again gave traders some session opportunities before exploding back through the high on Friday. And a first red day, non-farm payrolls Friday. Now here's the thing. So traders, again, they look for the first red day trade the next day, and then they walk away. And notice the same behavior. We break down and pull back and close as a bullish day, not quite in breakout, barely. If it is in breakout, it's barely. But I want to show traders the exact same thing, the exact same behavior that we witnessed the previous month when we had our first red day and then a bullish engulfment on our Wednesday for an ACB template on the Thursday. Now, in this particular week, we have our non-farm payrolls Friday, and we have a Monday, Tuesday setting up for a Wednesday potential ACB trade. Now, we may have had major red news on this particular day. Believe it or not, lo and behold, we had CPI. Now, this is a great example. If we just go back to our previous month, we've got higher level longs in the market, where we talked about this in the playbook, the second day trade after a high impact major red news. This carried right through in Asia, continued to just drop and closed at the extreme. Wednesday, Thursday closing at the extreme, and a Friday ACB opportunity in one of the sessions, reversing back to the inside of that range. Point being is that first red day, first green day come at the extremes. So traders are constantly trying to short it because it's at the high. They want to catch the high. They may have had a coil for a one-day explosive trade setup or session opportunity. But when the new month starts, new timing cycle, we have a first green day closing out the month. Now, remember what I said about if you are a higher time frame trader and you're positioning yourself at one of these extremes based on those signals, this market had 1, 2, 3 days and still didn't take out the low of the first green day signal at the end of the month and gave a new first green day signal for 1, 2, 3 higher closes. Now, this is where traders need to be careful. They take this, but once you get to the extreme, understand that this market now could be potentially trapping longs up high. The move started down low, low of month, and continued to trade up. When you're buying up high, or if you're selling down low, that's where traders can get trapped, either holding on to positions, over leveraging, oversizing in a market that may be designed to trap you and reverse in that day before even exploding on the larger time frame. It still may be using this to trap traders and hold them in loss into the close and the new day before that market explodes. And this is where traders blow their accounts out. They average into a loser, they hold on to a loser, they do all kinds of crazy things as that market continues to go against them, and in this particular case, for the entire month in a large range. So first green day, first red day at the extremes. This is just one example. We're going to walk through multiples. Again, I'm just stepping you through the process. When we get to the new month, the new timing cycle, looking at the signals. First week is non-farm payrolls every week. And then when we do have a signal, being patient and allowing ourselves to wait for that coil to present in our session when and if it does present. Keeping that on our watch list, not trying to counter trend the underlying theme or direction now that that extreme may be locked in place. We'll continue our discussion of this in the next video, traders.